you all have access, that in that same place we will host it. So this is our webinar we are conducting today. Hi everybody, very good evening. One second, please. Because I hope all of you know that the recent I think 15 days ago the CBDT had put out a message, and they had shared across that 25,000 plus people had received notices. And I think Sumit will tell you, I'm sure, much more than that is what we understand, on non-reporting or incorrect reporting on RSUs, in particular RSUs and ESPP, but foreign assets in general, people have not reported correctly, or they have reported incorrectly. So that really got us to do something for our retail audience, and that's what today we got Sumit, who's our partner in income tax filing, income tax consulting from our end, from FinSafe, for almost all the corporates. You can see on our website, Sumit Bed Associates will be there. The reason why we partnered with Sumit, and not too many ITR CA also on our platform or website, you will see why, is because we want to ensure that we partner only with folks, only with CA who has complete thorough knowledge in this space, because this is very important. I do see people doing it, but a lot of mistakes happens. So day in and day out, FinSafe is getting mails from a lot of people saying that, I've got a notice, what do I do? I can't do anything. FinSafe can't do anything about it. Please figure out from your end with a chartered accountant if you can. Or the idea of this session is, we are trying to do a program where we will talk about when do you file. Especially, this is only on foreign assets, guys. We are not going to cover anything beyond that. And I've also requested Sumit to take us through a step by step, if possible, on the platform, if ITR portal or somewhere, if we can do that, that will also be great. So thank you so much, Sumit, for taking this time out. Just a quick introduction of Sumit. Sumit Bed is a fellow chartered accountant, and he's got bachelor's from Bangalore. He studied, and then he's of course done his CA. He has his own firm where they manage this tax filing for all individuals, corporates, companies, and many others. And he is expert, of course, in the foreign stock segment. Of course, is somebody that I go to for any questions I have from FinSafe. If I need a clarity, I go to Sumit, of course. Sumit, we have less than 1 hour now, so keep that in mind. We will try to cover, but even if it spills over a little, I would request if you can be kind enough to take up some questions.
Sure, thank you. So what
Right?
I tried to do, I tried to cover the session in 30 to 45 minutes, and
Great.
then give 15 minutes question and answers if anybody wants to ask anything in specific.
And we will be recording. So, Sumit, and we will record. We have started recording. We'll put the recording in the platform so people can go back and see it. Over to you, Sumit.
Done. Thank you. Hi everyone. So off late, even CBDT when I released a press release stating that if you're not declared, please declare it before 31st December, your last year return. Otherwise, face penalty under Black Money Act. Ma'am, please move to next slide, please. Yeah, thank you.
Yeah.
Okay, so let's start. How does the RSU journey actually happens? First, the company grants you. At the time of granting, the grant is only a promise, so there's no taxation anywhere. After granting, vesting happens. At the time of vesting, obviously, it is taxed as perquisites in your salary. And at the time of selling, you need to pay tax, short-term or long-term, whatever, depending on the situation. Taxation, non-taxable to perquisites to gains. Okay, now foreign assets. What you need to do, you need to mandatory fill your Schedule FA in your ITR 2. Folks, even you can make a note of it so that it will help you later, that you don't miss next time when you're filing your return, or if you want to revise, it will definitely help you. So Schedule FA is compulsory to be filled. I have seen cases where people have declared their sales, but they forgot to fill their FA schedule, and they've ended up paying 10 lakh rupees penalty under Black Money Act. And the same thing has been challenged. It's in appeal, but yes, the law is very strict. The law is very clear. You need to declare, irrespective of the sale, all the holdings. Even if you want to claim the foreign tax credit, right, you need to file Form 67 and double taxation avoidance agreement in case you have taken a TLC and you want to take the benefit of it. Only then DTA, otherwise the normal foreign credit process. That we will discuss in session how it works. That's all. Next, we will even take you through bits and pieces of ITR RSU filing, how it works. Right. If you have missed any of the years, you need to revise your return. If it is this year, you can revise your return till 31st December. No problem. But provided you have missed the previous years, right? You can revise up to, you can file an updated return, provided you will not be able to claim refund, and there should be a tax payable for the previous 4 years with certain penalties or late fee, whatever we'll discuss in future. The common mistakes, the penalty is the Black Money Act can up to 10 lakhs penalty or 10 years imprisonment or both. I'll give you a compliance checklist which will help you, and we'll also cover what are the FAQs. Right. Now coming to the grant, as discussed, there is no tax. It's only a promise. ITR 1, yes, you can file ITR 1 if it is only grant. Please note only grant, not vested. If vested, then definitely ITR 2. RSU vesting, right? When it is vested, very few important things what people miss out. I want to cover out here this also. When the company gives you as perquisite, right? The FMV at vesting will become your cost. Please note, the FMV on the vesting date will become your cost, and it will be taxed under the head salary as perquisite. It will be taxed in your slab rates. Now, and what does most of the companies do? They sell RSUs or ESPP or ESOPs, whatever name is been allotted to you. They sell to cover the tax amount. So when they do that, right, there's a FMV at the date of vesting is your cost. And what they sell, you'll have to pay a short-term capital gain tax, where most of them they miss out on this part. So this part is also pretty crucial, and you need to make a note, and you need to declare that sale as short-term capital gain. Might be a small capital gains, but still you have to declare this. Next slide, please. Okay, after vesting, what happens? What are the other incomes which is taxable in India? Right? Some of the companies give dividends also. The foreign dividends is completely taxable in India, provided you can claim the foreign tax credit by filing Form 67, provided you file your returns on time. So if the due date is July 31st, this year was extended to September 15th. If the due date is July 31st, you need to file Form 67 before July 31st, before filing your return. Only then you will be able to claim foreign tax credit. Otherwise, no credit allowed. So you lose a good amount of money. Usually, if it is a US thing, they deduct 25% tax. So you lose 25% credit. So please be cautious. File your Form 67 on time to claim the credit. Next, at the time of sale of shares, there's a lot of people ask me, so I want to tell. The period of holding is 24 months. It's not like an Indian listed company where period of holding is 1 year. Here the period of holding is 24 months. Why? Because it is listed in foreign stock exchange, not on Indian stock exchange, right? So anything listed outside India is like an unlisted shares in India. So the period of holding will become 24 months, not 1 year. If you are holding less than 24 months, it is STCG. Don't go on your broker records. Some of the brokers follow 1 year as long term, and less than 1 year as short term, and more than 1 year as long term. It is more than 2 years or 24 months long term, less than 24 months short term. And your cost would be FMV at the date of vesting, and you need to report your capital gains accordingly in your ITR. Next slide, please. Yeah, and Schedule FA mandatory for foreign shares. Even if the total income is your below exemption limit, and you have held even for 1 day, or say only it got vested and you sold everything, still you need to declare. Declaration is compulsory. Even if 1,000, yes, you need to declare. If you don't declare, per year penalty. But yeah, in budget 2024, government has given one slide, what do you say, exemption. If your foreign assets are less than 20 lakh, penalty will not be imposed, but it does not mean declaration is not compulsory. Declaration is compulsory. Okay, FMV means fair market value. Somebody is asking, I'm just replying to that. FMV means fair market value, right? And what else you have to cover in your ITR 2? Schedule FA, Schedule FSI. In Schedule FSI and Schedule TR. Schedule FSI is your foreign source income. If you need to fill this schedule compulsory, but please note, this does not take the income automatically in your computation. You have to fill also in your respective heads. Say, for example, if there is dividend income, other income will go in your computation and FSI will give the right declaration. I'll take you to one of the schedules, you'll get an idea on that. This is about schedule FSI. And what is TR? TR is about tax rebate. Tax rebate, right? Tax which you need to claim on your foreign taxation. Say, like I was telling you, dividend, some countries direct 25% tax, right? To claim that rebate, you need to fill your schedule TR. You first you will file your form 67. The same rebate should come in your schedule TR, which gets deducted from your total tax liability, well, at the time of filing your return. Please move to next slide, please. ITR 2 filing, right, is a complete checklist or schedule what you will have to keep around. Salary plus perquisite value you need to declare. Please take a snap of this. This will help you. Where and all and what and all you need to declare. All of you can take a snap of this. This will help you. In your salary, or obviously it comes with perquisite. Capital gains. Whatever capital gains you sell at the time of vesting to cover your perquisite that you need to, your company sells rather, and plus you sell by yourself after a certain time, long term or short term, you need to declare in Schedule CG, Schedule FA, foreign asset disclosure. It covers country, company, holdings, peak value, closing value. That I'll take you to schedule, you'll get an idea. Schedule FSI, foreign source income, is just a disclosure like where and all you need to declare. What are the foreign source like dividends, capital gains? Those information will come in your schedule FSI. Your schedule TR, that is your tax relief. Yeah, Tushar, I come to you. Please hold. Tax relief, DTA benefit, schedule unlisted shares. Yes, Tushar was asking, does the all foreign shares will come in your unlisted shares? Yes, it is not listed in India, so it is an unlisted share. There's an option called foreign company. If you select foreign company, you don't have to put even the PAN of the company. Some people might ask that question also. Next, I'm answering in advance. So all the comes in unlisted share schedule. There is no penalty for missing out the schedule, but it is a right practice to declare this in the schedule. So please, you need to declare schedule OS, that is other sources. If dividends reported, if you are getting dividends, you need to report this in also OS, because this other sources schedule, because in FSI schedule is a disclosure purpose only, and if you declare in OS, it goes to your computation sheet. And form 67, yes, obviously. You need to file a separate form on income tax portal to claim the foreign tax credit. Yes, can we move forward, please? Step by step. So these are the basic documents which you need to hold. Your form 16, obviously, your broker statements. From your broker, you can get the statements like gains and loss statement, the total holding statement, foreign tax withholding certificate. If you go to your broker, right, and if you're a US broker, you get something called Form 1042SS, Form 1042S. Different country have a different tax form, so that you need to get. Depository account statements, obviously, or whichever is your broker, Morgan Stanley, E-Trade, whatever, Charles, whatever, that statement, that number, their address, that details also you need. And exchange rate documentation for SBI TT rates, TT buying rates. This is very important. How do you calculate capital gains? I'll just tell you that also. That will help you. Capital gains, dividends, how it is calculated, so that it will help you also, right? Now coming to the perquisites, FMV at vesting cost to you. So whatever, if it is given at zero cost to you, and FMV is 100 rupees, so 100 rupees is taxed as perquisite, and 100 rupees is your cost at the time of selling. If it's an ESPP, you have bought it at 10 rupees, the difference 90 is taxed as perquisite, and 100 is again your cost to you. STCG, sale price and minus FMV at vesting, obviously like what we discussed. LTCG again sale price minus fair market value at vesting. Like if you are holding more than 24 months and you are selling, there is no indexation. Your actual cost minus sale price. Actual cost is nothing but your vesting price cost. And dividend, right? Gross income before foreign tax. So that is the net income what you get, right? Say $100 dividend you get, that is your tax. Now how to take the rates? It will help you. Say you have got a dividend on say 15th November 2024. You'll have to take SBI buying TT rate as on October, the previous month, last rate, October 31st, 2024. That is the law says. You don't have to take the same day rate. You have to take the rate of previous month closure date. So if something event have happened in November, you will have to take the date of October 31st. Whatever date. Even if the event happened on November 1st, you have to take October 31st date. Event happened on November 30th, you have to take October 31st date. In my example, as I am stating, to calculate your dividend in INR. And the foreign tax paid abroad is also simultaneously will happen accordingly. Next step, please. Yeah.
So where do we get this rate? Sumit, hi, this is Mrin here. Where do
Yes.
we get this SBI TT buying rate? Where do we get it? Like the
Yeah.
information?
Hi, Mrin ma'am. So it's a
Yeah.
very good question. You go to SBI website and try searching it, they'll only give that day's PDF. So it's not good. So one side we have figured out where we can actually figure out this rate. I have that slide. I think I've shared it with Anusha ma'am. Can you share that in the chat box? People can take a
I
Sure.
note
will,
of.
because
Yeah.
I'm sharing the screen, I'll try to share it. Yeah.
RBI also has a reference rate, right? Can we take that or no?
See, the law says SBI TT rates, but
Okay.
unfortunately, right, the TT rates are only available after 2021. So in cases where we don't get right, we also use RBI reference rate because
Yeah.
that is still okay. I mean, the
Okay.
law does not, law specifically says, I'm again telling, that's your call. It says SBI TT rate, but that is a practical problem. It gets through. There are no issues at all. But saying that, again, you'll have to take your own call, consult your own chartered accountant and take. You have to take SBI TT buying rate. That's what the
Okay.
I'll,
law says. So
Yeah.
that
the link
also
is, yeah,
there
I'm
will be
putting
two
the
rates,
link
right?
now.
Buying and selling. You have to take the buying rate. Otherwise, if you don't get,
Mm.
you can cover that. I'll just share one site. It's a third party site, but it's pretty good. It is consolidated well. You can use this.
Yeah, I put the link now. It's come. The link is put.
Anusha, if you can also put the RBI ka link.
RBA link, is it?
Yeah.
Okay, because I'm sharing the screen, I can't
Okay,
share
I'll put
anything
it.
there.
I'll put it. I'll put it.
Yeah, yeah.
Done. So this about this. Now can you move to next slide, please?
Yeah, I'm moved, I'm moved. Sumit,
Yes.
I'm moved.
Yeah. Thank you. Again, ma'am, next slide, please. So I'll do one thing. Rather than showing like this, I'll take them to a direct income tax website. Will that be helpful? Can I share the
Yeah,
screen?
yeah, yeah. Yeah,
I'll just share my screen if possible. Let me see.
sure.
My screen is visible.
Yeah, it's visible, Sumit.
Great. I'll just show you directly how it is done in short. I mean, I can't go in much detail due to the time constraint, but yeah, how much ever I can show you, definitely I'll show you.
Yeah.
I'm logging into my site only because due to, right. So when you log in, right, you can see something called income tax return. First, I'll show you Form 67, how it is done. Then I'll show you income tax return. You, guys, please take a
Yeah.
step-by-step thing. It will help you. Go to e-file, go to income tax forms, go to file income tax forms. I think, yeah, see, yeah. So if you see here, right, they're showing you this form. Let's get started. So this is the part A of the form, right? I'll tell you also, in fact, where can you find this form later. So first I'll tell you how this form is filled. This is the part A, right? Obviously, the basic details of the SEC come, name of the SEC, span and address, assessment year. You can save this later. Next is part B. Here you need to also mention that if any foreign tax you have claimed, it have come due to carry forward of losses or foreign tax refund which is under dispute. Both you need to select no. If yes, then it's a different process. For most of them, it will be no. So you need to select no out here. Going to again part A, I'll just open for your thing. You can do here called add details. This will give you details. Name of the country, say for example, USA. You can select, say United States of America, right? Source of income, you can select under what head is your income. Say dividend, you can select dividend. Say you have got $100 and the exchange rate is 90 rupees. So 90 into 100, 9,000 income earned outside India. Usually for US, the tax rate deduction is 25%. For ease of calculation, I'll take 10,000 rupees. So taxes paid outside India is 2,500. Rate is at 25%. Tax payable under such normal provisions in India. Usually, if your income is more than 50 lakhs, it's a different rate. More than 1 crore is a different rate. Let's assume your income is less than 50 lakhs. So at 31.2%, so that would be 3120. So credit claim. So yeah, again, DTAA you cannot claim just like that. To claim DTAA, you should have TRC. Otherwise, it's always without DTAA. Under the normal provisions, we are claiming we are claiming credit under section 91. Here you can put the amount of 2,500 and you can add. You can add. This information comes and you can save it later. Guys, this you can go to the recording and see later. This will help you. Now after this is very important. You need to attach documents here. What documents you need to attach? Form 1042S, your broker statements clearly showing dividends and the tax deduction. You need to consolidate the file and then attach it out here. If you forget to attach it, you will not get the credit. So you need to attach Form 1042S or whatever is your tax form of your country, plus Form 10, plus your broker statements clearly showing the dividends, which you need to attach here. And after filling all the details, you need to just verify and file it. This is about Form 67. Now moving to how to fill Schedule FA in your income tax return. Select assessment year, say for example 25-26, online, continue, or you can just say start new filing. It's all the same. Like I've just for the session I've kept the thing ready. Yeah. So right, I'm continuing now. Yes, continue. Skip questions. See now, I'll tell you, most of the people will not be able to file unlisted share schedule. I'll tell you where you need to check. You have to go to general information. You need to go to filing status. If you are revising now, you need to select section 139(5). Right, your original return data and all that will come here. See, here you need to select you are holding unlisted shares. You need to select here yes. Right? And you need to give details here. Name of the company, for example, just example Google. Foreign, yes, PAN is not compulsory. Compulsory, the star marks come here, please have a look. No star marks, so no compulsory. So till as on, there's a good thing about foreign shares is you need to disclose as till 31st of last year. But income is from April to March. Disclosure is 31st March. So, but anyway, you can follow March also, which is not bad. You need to give your opening balance of the shares, say 1200, what you are holding as on last year. Cost of acquisition, you can give, say, whatever is your cost of acquisition. Plus, now what number of shares you have acquired during the year. Date of subscription, so that is your date of allotment. Face value, you need to go search online, what is the face value of the share. Into dollar price, into 100, you need to do and put face value out. Into dollar rate, you need to do and put this price here. Issue price also same because it will be a fresh issue in case of RSU and ESOPs. Then shares transferred during the year. If you have sold any shares, that disclosure will come here. The number of shares you have sold and the share consideration. That's all. The capital gains will not come anywhere here. Only number of shares what you have sold and the share consideration, and the balance would be your closing balance and cost and total cost of acquisition. If you have bought on different dates, you can keep adding the column and you can keep filling. In one place, you can put opening balance. In other places, you can just put cost of acquisition and date of current subscription. This about the unlisted schedule. Now moving to the next. Again, going back to summary. Now, see, for example, you have any other income, right? You have to declare correctly in capital gains on other sources. Now, I'll just take you the foreign. This is Schedule FSI, what we were talking about, right? You need to declare here also the details of income. You need to again select which country you are. Which country you have got the things. So, just example, you are selecting some country out here. Say if you don't have your tax identification number of that country, right? You can put your passport number. Just see the helpline here. In case TIN has not been allotted in the country, please mention the passport number. You can put your passport number, no problem. And whatever head of income you have, the thing, you need to disclose out the same thing here, whichever head you have. Say, for example, you have dividend, say 100 rupees you have got here, taxes paid outside India 25, tax payable in India on the same thing, where this is 25 and this is 31. That's for the ease of calculation. Right, relevant article of DTA only when you have TRC, tax residence certificate of that country. And it's mostly for non-resident, it is not for residents. So you mostly 91 will have to follow without DT AA thing. So this is the thing. 25 is the thing, and taxes paid outside India 25 and paid in normal provision 31 rupees. You need to fill the same thing in. See, you can see the, please ensure that income reflected schedule FI is also reflected on the respective schedules of income. You need to go to other sources and add this 100 rupees out there. So you just then need to save this. Okay, I need to actually fill everything. Right. So I'm just confirming. Schedule FSI is done. Right, now next is your schedule FA or schedule TR. Schedule TR also we can do. Schedule TR, let's do first. See what details I filled there, right? In schedule FSA, automatically it comes here. And it says you get a rebate of 25, the lower of paid in India or foreign, whichever is lower, that rebate you get. You just need to confirm this. Just confirm this and your schedule TR is also ready. 91. Right. Now next schedule is schedule FA. Right. So these are the details of your foreign depository accounts held in foreign. Guys, please note this is a very important schedule. Schedule FA. If you fail to disclose this, right, there's a penalty under Black Money Act. So this is compulsory. If you're holding, selling, whatever you're doing, disclosure should happen here. This is your depository accounts held, custodial accounts held. This is an important schedule. I'll just show you one schedule. What details do you need? Say, for example, which country. You need to select the country code. Which country, say, example. Okay, let's select any country. Does not matter. This is example anyways. The name of the entity, say, XXX. Address, you need to check the address from your company HR. You can check all the, you can do the, see which entity shares you have got. You can do a little Google and take the address. Zip code, whatever the zip code. If it's not there, you can put 000. Nature of entity, company, LLP, LLC, whatever. And what date you have acquired the interest. Say you have acquired on 1st December 25, but okay, we are doing for the last year, so let me select anything I can select, does not matter. I mean, 1st November 24. What is your total cost? That is your fair market value on the date of vesting, say 100 rupees. Peak value. Now the peak value is for during that period. What is the highest value that share have gone? That you have to do little research, find out, and because every different country have a different stock exchange, either ask your company HR to make a detailed thing and share it with you, or you go and find out. Say it became 200 rupees during that period. So you need to put the peak value of your investment during that period. And what is the closing balance? Closing balance, you can take 31st December closing stock price of that thing. If you are doing March, you can take the March closing price, does not matter, 120 example. Now this is gross amount paid credited during that period. Now this gross amount paid credited is, for example, you have got any dividend or, right, anything of those things, right? So you got a 20 rupees dividend, you have to put here 20 rupees dividend. And if you have sold anything, right, and you have got sale value of that is, say, 150 rupees, then you have to put here 150 rupees. And then save this. This accordingly, I have to keep adding more and more details as in when. And I will just show you one depository account, custodial account also. What details do you need? You'll get one idea. The country you have to select the name of the financial institution. Again, something we'll select. I mean, let's say XYZ or Morgan Stanley, whatever, XYZ. Address again, you need to check. Again, the zip code. The account number will be of your custodial account. The statement what you'll get, right? You'll get the account number out there. You can just see the account number and put status. You can see, you can write the owner or beneficiary owner. What date the account was opened, that date you have to put. You need to actually figure out when it was opened and you need to put the correct date. Again, here peak balance and closing balance is not your stock balance. If any of the money dividend have come, you have not repatriated or any reserves is for reserves are there, whatever balance is in the depository, not your share balance, your reserves or any cash balance which is there, that you need to declare here. Peak value and closing value. That's all. Here also, if any interest has been credited, you can give here details of interest and amount because dividend you are giving in Schedule FA. So this is about two important schedules. Apart from this, any foreign property, immovable property you're holding, that you have to give. Any financial interest in any entity you have, if you're doing by yourself, you have to give. You are investing by yourself in foreign stock, that details will also come here apart from RSU, ESPP, apart from capital gains. So these are the important schedules of, what do you say, the thing what you need to declare in your, and yes, of course, schedule asset liability. If your income is more than 1 crore, right, again you have to declare that in your this schedule also. Details of mover assets in financial assets is there, right? Your shares and securities, that value will also come. This is also another important schedule where you will have to do the disclosure. So this is about it. Ma'am, can you share back the PPT, please?
Yeah, one thing.
Amit, can we revise for early? I know you said for 24. Can we revise for earlier like 21, 22 also?
You need to file updated returns, provided you should have some tax payable. What I would suggest, if you don't have tax payable also, right, show some small income, do the tax payable and file the updated return. You will be safe.
Even for RSUs, I mean, like when we have
Yes,
RSUs
for the purpose of disclosure, yes, we'll have to do it. So just show 100 rupees income, pay whatever tax comes on it, and do it. At least we are following it, because there's no other way you can do it. That's the simplest way and shortcut I'm giving you, which you can do it, and it will help you also. Tomorrow you get a notice, right? It will avoid a penalty of 10 lakh rupees. Anusha ma'am, can you please share the, I think I'm not able to see.
Yeah, I've shared it. Which one? What do you want to see? I've shared it.
Yeah, sorry, yeah. Got it, yeah. Yeah, now missed the real years. We are coming to this. So before 31st December, no penalty. You can, whatever is the actual income, you can do that. And you can do unlimited time filing, no problem. Now, second option, like somebody was asking me, right? You need to file updated return, right? There might be an additional tax penalty of 25% to 70% of the tax payable plus interest. You cannot reduce income. So basically, there should be a tax payable and income should go up. And only once every assessment year it is allowed. So now you have discovered, please go and revise all your returns if not done for all the previous years. It will save you from a lot of penalties, 100%. Because what we are facing for a lot of clients now, people who mostly file by themselves or who, don't know, they come to us. Income tax department is going, you'll get a notice. Mostly it is happening like this, mostly from enforcement department, and they are going very hard bang on. They are not leaving any case. In a single case, they are putting penalty. You say, we are putting 10 lakhs penalty, you won't go and appeal. And that's unfortunate law. A lot of people with ESOP, ESPP are getting stuck in this. I'm at least handling 30-45 cases at the moment. So I'm telling you, please take it very seriously. Go and revise your return. It will help you to save a lot of money in future in case you have missed something. And can we move to next slide, please?
Yeah.
Yeah, these are the critical mistakes. Reporting income without Schedule FA disclosures. See, when tribunal rejects, penalties upheld even if the income is taxed. You might have to go till High Court, but it will be relaxed. It won't be 10 lakhs, but why? If you have an opportunity, please revise it. Don't get into litigation. Don't using cost price instead of FMV. So very clearly you have to use FMV because that will give you more better benefit. Cost will be 0, but FMV might be 100 rupees on the date of vesting. So please use cost. I'm just telling the common mistakes what people do so that your capital gains is computed correctly. Claiming section 112A, yeah, like what I discussed, right? This is not a listed state in India. 112A is for listed states in India. Period of holding 1 year, 2 year. 1 year applies for 112A. That 1,25,000 long-term capital gain exemption is for 112A. For foreign stock, there is no such exemption. It is taxed in section 112 and period of holding is 2 years. Yeah. So 31st December, you can revise your ITR. Again, you need to file Form 67 before due date, otherwise no credit, like as discussed. This year, the due date was extended till September 15th. If you have filed your Form 67 till September 15th, you will get the credit, otherwise no credit. Missing dividend income from foreign stocks is very common. A lot of people miss. Please go check your broker statements. There will be foreign stocks. Please claim it. Please file Form 67. Please claim the rebate in 5-year taxes. Stay updated. Avoid penalties. Non-tracking peak value correctly in Schedule FA. This is also very common. Most of the people do. Yeah, this needs to be done on first year. It has been vested, but maximum you can go back is for 4 years at the moment. If previous year have been missed, you can't help it. Just wait and pray nothing happens. That's the only option available. Please move to the next slide, please. So these are the checklist.